Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Agam Akil, and in the next 30 minutes we deep dive into specific trends in the markets to draw out key takeaways and implications for investors. First, the headlines. Tepid Thursday on the last street as both benchmark indices trade with marginal gains, broader markets outperform. And Tata Motors is one of the top nifty losers after Jaguar Land Rover sales dropped 9% in the US on a year-on-year basis. And India Services PMI returns to growth in December with the seasonally adjusted business activity index at 50.9%, up from 48.5% in November. And train and flight services have been affected for the third day in a row after the thick fog engulfs the national capital and several other states in North India.
All right, let's take a look as to what's happening with the markets today. Well, it looks like another lackluster trading day where Nifty is once again trading in a range. So 10,463 is a mark where Nifty is currently trading. Well, definitely the broader markets today once again are outperforming the benchmark indices. So if you look at the BSE mid-cap, small-cap index, both of them have registered gains between 0.4% to between 0.6%. Even the broader markets of National Stock Exchange are seeing good gains of almost 0.5%. That's for both the mid-cap as well as the small-cap index. Let's just pull up the India VIX that's cooled off from the gains that we were seeing until 45 minutes back. So India VIX is now actually trading in the red at levels of 13.5. Besides IT, auto and realty index, we are seeing gains coming up for a lot of your sectoral indices. And I want to pull up the intraday chart of the Nifty PSU banking index. That's seen gains of almost 2% after the news came in that maybe the government could announce the PSU banking recapitalization today. So let's see whether that comes about or not. But after that news, you did see some gains coming up for the Nifty PSU banking index, and most of the constituents of that index are trading in the green. Besides that, outperformance continues from the metals side. The Nifty metals index is also registering strong gains in today's trading session. The Nifty metals index has seen gains of almost 2% coming about, trading around those levels of 4,074. And remember, this is after registering gains of 48% in 2017. But let's look at the Nifty constituents and check the contributors list, which are the stock which are contributing the most today. Your heavyweights, L&T, that's one of the top gainers in Nifty with gains of 2%. That's contributing nearly 9 points to the gains. And from financials, you got State Bank of India, HDFC Bank, and also Reliance Industries is trading in the green. What's capping the moves on the upside are the likes of Infosys, HDFC, Sun Pharma, as well as Tata Motors. But Agam, we've been talking about the outperformance from the broader markets. Once again, the market breadth is looking pretty good today. Fortunately, Navneet, because just a couple of days back, we were actually looking at a little bit of a reversal in that trend, but we have seen the advances take over declines once again, and that trend has come back. And with respect to some big movers in the broader markets, there are several counters that I do want to talk about, but let me pick up something like an SJVN because that is seeing a lot of strength in today's day of trade. The stock has moved up by well over 12% for that matter right now, and IDBI follows, of course. So some of the PSU banks are back in play, with IDBI gaining as much as 7% in today's day of trade. Indian Hotels is the other counter which is leading the BSE mid-cap space, and we have about 4.4% gains there. And of course, Navneet's already mentioned the Adani Group pack, but we have the likes of M&M Financials as well. And in fact, M&M Financials is looking at a substantial increase in open interest as well. So a lot of longs building up as far as its derivatives market is concerned. On the losing end, a handful of counters only, but Reliance Communications is one of them, down 4.3%. We have GMR Infra down 2.3%. On the whole, when it comes to the momentum, it is with the advances, the gainers. So we'll have to wait and watch as to whether or not this strength continues as we move on to the end of the session, Navneet. Okay, that's about the markets. But on trend spotting today, are there more legs to the rally in real estate? We asked Pradeep KP of Brigade Enterprises. Is the rise in commodity prices set for greater heights? We asked David Lennox of Fat Profits. And which of the two Bajaj brothers have performed better? We discuss all of this through the next 30 minutes.
All right. Navneet, let's go across to the first trend. And we know that we have seen substantial gains in the entire realty space. In fact, I was just going through some data some time ago, and not only has a Nifty Realty Index doubled in 2017, it is the only index which has doubled, in 2017, and moreover, it is also the first time that it has given returns of over 100% since the inception of this index on the National Stock Exchange. And there are several counters on the Nifty Realty Index which have moved up. So we have the likes of India Bulls Real Estate, we have Unitech, Sobha, even something like a Brigade Enterprises, and we are going to be talking to the management of Brigade Enterprises, which has gained substantially. But some of these counters have gained well over 125 to 150%, and
a lot of the stocks which are outside this index
absolutely
have
yes.
also seen good gains, and that is, I remember after last year's budget when the finance minister announced some benefits for affordable housing players. So you had Kolte, Patil, Ansal Housing, or even these stocks which
right.
are outside the index have just seen good amount of gains, and these are the perks actually which have been announced by the government, and also the affordable housing trust, housing for all by 2022 for these players is what is auguring well. But what's the ground situation? I think we should ask the management of Brigade Enterprises.
Absolutely, Navneet. So we do have the management of Brigade Enterprises along with us. But before we go to the management, there are a few charts that I also want to bring up. Firstly, when it comes to the analyst recommendation for Brigade Enterprises, 6 out of the 6 analysts on the Bloomberg consensus have a buy rating on this counter. Moreover, the price target, that the consensus price target on Brigade Enterprises entails at least another 10% upside from current market levels. So with the rest of its peers, Brigade Enterprises is one of those stocks which stands to gain, and that is the street view. But let's get an idea about what's going on with the industry and what's really the outlook for the company itself. So for that, we are in conversation with Mr. Pradeep KP, Chief Financial Officer at Brigade Enterprises. Thanks for joining us, sir. My first question will have to do with the trends that you are witnessing in the markets that you are present in. Over the last 1 year, we've heard so much about the slackness in demand for residential as well as commercial projects. But we've also seen a little bit of an improvement in the last 2 or 3 last 2 or 3 months in terms of changes. So can you just give us an idea about how demand has changed and what it means for something like Brigade Enterprises?
All right. So good morning to everybody. So Brigade Enterprises is predominantly in the southern part of the country and has its operations out of Bangalore, Chennai, Hyderabad, Mysore, Cochin, and Mangalore. And we also have a small operation out of the GIFT City in Gujarat. What we have seen over the last couple of quarters, as you're all aware, that we have gone through a demonetization and a RERA and a GST almost one after another, and the industry has been absorbing all these changes over the last couple of quarters. I should say, to a large extent, the impact of demonetization and RERA has more or less been absorbed by the industry, and the GST bit to the whole change is still getting absorbed through the value chain. We believe that in a couple of quarters we should see some steadiness on that too going forward. Coming to the demand scenario, well, we did have a little bit of a soft muted quarter over Q1 and Q2, and the Q3 results are currently in the stage of finalization, so I will not be able to convey. But on a more generic note, the industry has been feeling a little better over the last couple of months, given that a lot of these changes have been absorbed by the industry. A lot of fence sitters, we believe, who are waiting and watching because there were so many changes happening at the same time in the industry. A lot of the fence sitters, we believe, are now coming back to the market, and that should start giving some positive changes as we look at the industry going forward. That's from a residential side of the business. From the commercial leasing side of the business, we've the statistics that we have been seeing over the last couple of quarters indicates that at least in the southern based markets, we've seen a lot of stability, if not actually a lot of supply not coming in for demand that's extent. So if you look at the statistics, it says that 4-5% of properties are unsold. Otherwise, everything else is more or less commercially leased, and that's true of the Chennai market, the Bangalore market, and I should say for some of the other markets in the south too. And if you look at absorption, a typical Bangalore market would absorb in the region of roughly 10 million square foot a year. We are at the half year at around 4.5, 5. So I presume that uptick will happen as more properties come onto the market over the next part of the financial.
Sir, you just mentioned that the industry has absorbed, the challenges which were thrown because of demonetization, RERA coming into play, and also GST. If I were to ask you, what has been the net impact of all these things on your financials, whether it has been a negative impact, which is largely being viewed by the market participants, could you quantify that for us?
So it's a very difficult quantification that you asked me to do. All I can say is that you've seen the impact of demonetization, RERA, and GST start impacting in the sale numbers that you must have been looking at in terms of various players in the industry. That was more or less a Q1, Q2 sort of story. I think going forward, we believe that like I said earlier, a lot of the fence sitters have come back into the market, and so we are seeing a little bit of genuine demand get back into the market. We're looking over FY19 a lot more positively. To put a number to each of these impacts is very, very difficult.
So I just wanted a clarification. Earlier you said that about 4 or 5% of the inventory unsold. Is that for the markets that you are present in, or are you referring to Brigade Enterprises specifically? And in that case, what are the new product launches that are in line that you can tell us about?
So that was more an industry comment, because the 4-5% is over the markets in Chennai and in Bangalore. For us, the numbers would more or less be around that, if not a little lower, in terms of unsold in the commercial space. Having said that, we have two large launches that we have already announced. One is the Brigade Tech Garden, that's in Whitefield, a 3.3 million square foot launch that we have already started. And the second is the World Trade Center in Chennai of around 2 million square foot. Both of them have been launched, and we're expecting them to be through by FY20 second Q. So these are the two large commercial projects that we have launched over the last 2 quarters. Yeah.
Right. Brigade Enterprises has also been in news recently after you guys bought 13-acre land for almost 218 crore in Bangalore for developing an IT park. Could you give us more details about this acquisition? Was it funded through internal accruals, and what sort of investment are you looking at to develop this park?
Yeah, so we did this acquisition. The acquisition is complete, 12.95 acres for 218 crores in the north of Bangalore. It's strategically located, and the intention is to develop an IT park. We've funded this out of internal accruals, and so we'll come back to you as plans fructify going forward.
So we're also reading about your plans to double the number of hotel rooms. So if you could give us an idea about how you plan to fund this as well as we move in.
Right. So we have currently an inventory of 1,000 keys spread over Sheraton that we have in Bangalore, the Grand Mercure in Koramangala in Bangalore. We have a Grand Mercure in Mysore. We have a Holiday Inn Express in Racecourse Road in Bangalore, and we have a Holiday Inn at Chennai on the old Mahabalipuram Road. So between all of these, we have 1,000 keys. Our intention is to move this up by another 1,000 keys, and as you're aware, we also have an LCLT process currently. We are putting all our hotel inventory under a separate subsidiary,
Right.
and the intention is also to look for an investor in the subsidiary going forward.
Right. I was just coming to that point, sir, that you are looking for an investor for your hospitality business. Are you in talks with somebody? By when can we see a new investor coming on board?
So it's a work in progress as we speak. We probably look at sometime in FY19 to take the progress on these talks on. Yeah.
Okay, so we leave it at that. Thanks a lot for joining us and giving us an outlook on the company as well as the sector in general. Of course, this sector has been buzzing, and we will be watching out for more developments as far as the real estate sector is concerned. But we'll move on, and the next trend or the topic that we want to address is commodities, which have been on an up move, and with metals surging for the third straight session. Crude too has been registering healthy gains, with the NYMEX trading above the $62 barrel mark and Brent above 68. So is this rally here to stay, and what are the factors leading to this up move? We are in conversation with David Lennox, a resource analyst at Fat Profits. I do want to go to David, but before we go to him, I just want to pull up a few charts to see how we have seen the movement of something like precious metals like gold and silver as against the dollar. So if you notice, in the period that's showing up in your screen right now, you see that while the dollar has continued to slide, we have seen a substantial up move when it comes to gold and silver. In terms of gold, we have another interesting trend here, that the months of January specifically have been very, very good for gold. So if we can bring up the seasonality chart for gold as well, you'll notice that over the last 3 or 4 years, the month of January has given positive returns for gold moving in. Now, let's bring in our expert. David, good morning, and thank you for joining us. Let me start off with your outlook on gold. We do have an upcoming Federal Reserve meet, and I know that will have some amount of implications, and of course there is a lot to talk about the other factors which are also governing the movement of precious metals. How are you viewing gold in the near term, say for example over the next 2 or 3 months then?
Certainly, if you have a look at gold over the next couple of months, we do think that the key factor that's going to drive the price has been that accommodating US dollar. And as you've just shown, it's been weak over the course of 2018. And we do think going through for the rest of 2018, not just the first couple of weeks, but for the rest of it, that the US dollar is going to struggle to rise. And if that's the case, then that's going to bode very well for the gold price through the rest of this year. So we would be expecting to see the gold price move higher, and we're probably looking to an end-of-year price at somewhere between $1,550 to $1,600 US an ounce.
In fact, Ragam, you were mentioning that in the month of January, that's been good for gold. So if you look at the prices, they were somewhere about $1,240 in the month of December, and now currently the prices have already crossed the mark of 1,300, around 1,310. And David has a bullish view when it comes to gold prices. But the other commodity, David, which has been in focus are the crude oil prices, which are currently now at about 2-year high. And you also mentioned about the US dollar, considering the point which my colleague was just making, that the US Fed meeting is there, and lastly there's an expectation that the rate hike could come about, which would also mean strengthening of US dollar, and majority of these commodities are denominated in dollar terms. So would you expect the crude oil prices to rise further this year? If yes, what's the sort of range that you're looking at for 2018?
Certainly, if you have a look at the crude prices for 2018, there have been a couple of geopolitical events that really are dominating, we believe, the momentum that we're seeing in the price at the moment. And that, of course, is what's happening inside Iran. There you've got nearly 4 million barrels of production a day, And of course, you've also got Iran on opposing conflicts with Saudi Arabia. So between the two countries, you've got around 14 million barrels of oil production a day. So that's keeping the markets very itchy or edgy in terms of pricing momentum to the upside. So we think that with both those events probably continuing to play out over the course of 2018, that's going to continue to keep pressure to the upside for the oil price. The US dollar, if it does have any impact, if it continues to remain weak, it will have the same impact as we've seen with commodity prices for the base metals and precious metals. That is, as the US dollar weakens, we'd expect to see a rise in the oil price. However, more so it's going to be those geopolitical events that are likely to govern the direction in the near term.
All right, David, I also want to address the way we've seen a move in industrial metals and base metals. I wanted to ask, what phase of the cycle are these in, considering we have already seen a substantial up move, and how much more can we expect, at least in the first 3 months of the calendar year of 2018?
If you cast your mind back, yes, to 2017, we did see that change in the momentum of commodity prices from what had been a very long down period to now what we believe is quite a sustainable up cycle. We do think that 2017, we saw that significant move in the bulk of the commodity prices, especially the base metals, from their lows, and we would expect that as market sentiment changed. In 2018, if you see, I guess, a coordination of global growth and especially industrial growth, then we would expect to see commodity prices continue on their upward trend in 2018. Throw in the view that we have an accommodating US dollar in that we believe it will be weaker, and that will add to the upward momentum for commodity prices this year.
All right, David, we leave it at that note. Thanks a lot for joining us today and giving us your outlook on commodities for 2018. Well, let's move on and talk about Jaiprakash Associates, as that's the stock which is in focus today after the Reserve Bank of India instructed banks to keep its insolvency proceedings on hold. Well, the regulator has asked the banks to seek some more clarity from the Supreme Court on the same issue. In fact, Vishwanath Nair joins us with more details on that. Vishwanath, is this move after Supreme Court ruling had barred the promoters to sell or transfer any assets?
That's right. There are some temporary restrictions on the promoters and the directors at Jaiprakash Associates to either sell or to pass on whatever stake they hold in the various companies in the group. So what the regulator has asked banks to do is try and seek some clarity from the Supreme Court whether they can actually go ahead and in Jaiprakash Associates or not. And till such point that such clarity emerges, the Reserve Bank of India has asked them to hold off on any insolvency proceedings against the case. Also, the banks in December, when there was a deadline that was set for the second list of stressed accounts, the banks had approached the Reserve Bank with a proposal that suggested that Jaiprakash Associates could be resolved outside the realty process. However, it seems that what our sources are telling us is that that proposal stands rejected, that the Reserve Bank of India does not want banks to resolve this as part of a previous plan that was approved by the lenders. They do want them to come up with a fresh plan, but the Reserve Bank temporarily has stopped any NCLT proceedings against the case.
Okay, Vishwanath, thanks for joining us and giving us an update on JP Associates. Of course, we'll be watching out for more developments there, and Vishwanath will keep bringing us more updates there as well. But we'll move on to address yet another interesting story, and that has to do with the Bajaj family. So one of the brothers is known to be a big yoga enthusiast. Besides being an avid biker, he also decided to stop producing the iconic Bajaj scooters, much to his father's displeasure. And his younger brother, Sanjay Bajaj, is not as flamboyant, but has built a good financial services business over the span of 10 years. And today, we look at the two Bajaj empires, which were carved out as two separate groups in 2008. Yatin Mota has done some number crunching here to see how each of these have performed in relation to the other, of course. Yatin, take it away.
Thanks for that, Agam. If you look at the Bajaj brothers, clearly The two companies, or the two business verticals got split way back in 2008, which is the effective date of demerger, wherein Bajaj Auto got trifurcated into Bajaj Auto, Bajaj Holdings, and Bajaj Finserv. The elder brother Rajiv Bajaj, managing Bajaj Auto, the automotive business of the Bajaj Group, and the financial services business of the group went to Sanjeev Bajaj, which is in the form of Bajaj Finserv and Bajaj Finance. Let me take you through the performance of Rajiv Bajaj. He's a mechanical engineer by qualification. Currently the managing director of Bajaj Auto, and if you look at the period from FY09 till FY17, the sales have seen a CAGR of 12.6% and a profit seen as a CAGR of close to 30%. If you look at the market capitalization change since 2008, which was the merger effective date, that was close to 85,750 crores. Of course, he built a business which was most profitable in the two-wheeler segment, and by size it was the second largest two-wheeler manufacturer, and in the last 10 years he is able to almost double his sales on a monthly basis to little over 3 lakh units now. Talking about Sanjeev Bajaj, he has got a mechanical engineering degree from the University of Pune, and also he is the vice chairman of Bajaj Finance and the managing director of Bajaj Finserv. Bajaj Finserv is the holding company for Bajaj Finance. So both of these companies are looked by Sanjeev Bajaj, and surprisingly, the kind of base Bajaj Finserv and Bajaj Finance had, they have been able to demonstrate strong return CAGR in the last 10 years or so. Sales grew at a CAGR of 68% for Bajaj Finserv and 42% for Bajaj Finance, and profitability also saw a growth of over 50% for both Bajaj Finance and Bajaj Finserv. Interestingly, the market capitalization change for Bajaj Finserv was nearly 76,000 crores, or rather close to 75,000 crores, and it was close to 98,350 crores for Bajaj Finance. It was already listed then, but we're talking about these changes as on Jan 3rd, which was yesterday. Clearly, Sanjeev Bajaj has been able to build a very strong financial services business, which includes NBFC business, insurance, and lending to MSMEs, so on and so forth. But this is something which you need to watch out for. Since the split happened, the effective date of demerger, Rajiv Bajaj total market cap stands at close to 95,000 crores today, whereas his younger brother Sanjeev Bajaj, which started at a similar note or similar market capitalization at that time, we have seen the current market capitalization zoom to a level of 1.81 lakh crores, nearly double to that of his elder brother. So clearly, both of these stalwarts have given a good growth to shareholders. But when it comes to the performance of Sanjeev Bajaj's Bajaj Finserv and Bajaj Finance, we have seen a tremendous amount of wealth creation for all its stakeholders.
Well, Yatan, it looks like the younger brother definitely has had a good ride by not acquiring or not getting the auto business. But before we wrap, I have a question for you. Are you a biker, are you a yoga enthusiast, or are you both?
I am not a biker nor a yoga enthusiast, but looking at how things are shaping up, probably it's better to remain low profile and live a normal life, as Sanjeev Bajaj is doing extremely well for his financial services business.
All right, Yatan, thanks a lot for bringing that interesting piece of analysis. And I guess with that, it's a wrap on this edition of Trend Spotting. Don't go anywhere. Up next is Hot Money with Darshan Mehta. Stay tuned to Bloomberg Quint Live.